Hello and welcome to the Of Interest podcast. I'm Gareth Vaughan from interest.co.nz. A series of extreme weather events in the North Island this year, including the Auckland anniversary weekend floods and Cyclone Gabrielle, have caused significant damage and shone a spotlight on insurance. Is the frequency of these events and the damage they're causing a tipping point for insurance in New Zealand? To discuss this and more, I'm joined by Tower Insurance CEO Blair Turnbull. Hi Blair, and welcome back to the Of Interest podcast. It's great to have you with us again.
Sure, thanks for having me.
Yeah, look, you were one of our first guests actually about 11 months ago now, and it's been quite a year for weather and insurance. So I thought it'd be great to have you back and catch up on where things are at. So you recently had your interim financial results out, and one of the things that really jumped out at me in there was you noted that the storm in Auckland on Tuesday, May the 9th, which a lot of people have probably forgotten by now, was something that you categorise as, or you expect to be, a large insurance event costing between $4 million and $6 million. Now, you know, this is a good reminder of just how many extreme weather events we've had this year, and especially that given that whilst this one in particular made people nervous for a couple of hours, it actually wasn't of the scale of some of the others we've seen, and as I said, people have probably forgotten it even happened by now. So how do you define a large insurance event, and how many have you experienced so far in 2023?
Yes, look, it was surprisingly bigger than some people anticipated on the 9th of May, but that was the fourth large event that we've had this year. And essentially we define a large event as having multiple claims and being a specific weather event, whether that be storm or wind. Around half of all of our large events tend to be floods, about a quarter are wind type damage events, and the balance is something like a hailstorm or the like.
Okay. And how does the volume and value of insurance claim that, I mean, both Tower and the industry more broadly is seeing so far this year compared to previous years? And I mean, how are you coping with it?
Yeah, we've had a lot this year, haven't we? As it turns out, we actually do have a lot of large events in New Zealand. I think as a country, we're quite obsessed around weather, aren't we? So we do have quite a few. But the nature of those events in this year has been quite different to previous years. So we would expect storms coming up from the south and Antarctica. We've had a lot of storms coming down from the tropics associated with La Nina over the last 2 to 3 years. And so overall this year, we've had 4 large events as mentioned, but the total cost of those events for this year have been really significant. Prior to 2023, our largest year was in the mid-20s in terms of cost of those events. For Tower, in the last year, we're up around $250 million in terms of large event costs, that being Auckland anniversary event as well as Gabrielle. So these are by far, for New Zealand, a record storm and cyclone weather events. In the case of the Auckland anniversary weekend, the largest weather event we've seen for the best part of 200 plus years.
Yeah, it's certainly significant. And what's Tower learnt from this recent run of extreme weather events about, I guess, your own data and models and expectations for such weather events?
I think when we take a step back, I think the most important thing about all these events is the realisation that we are seeing climate change, and that a really important thing now is that we get round that and we look to adapt to it and understand it better. I think with the benefit of hindsight and data and technology, we do have a lot more that is available to us to help us understand these type of events. And with that, I do believe will give us some options in terms of how we adapt. Okay.
So options in terms of how we adapt, I mean, that's an interesting point. So what are those options? And, where do we go from here, I guess, the how long is a piece of string question?
Yeah, it is. It's a tricky one, isn't it? And I think take another step back even further is, this is not exclusive to New Zealand. These events are happening all around the world. 2 years ago, we all sort of smiled when the Australians got a lot of weather events coming through along the Queensland and the coast. And more broadly, there's been some huge storms in Europe. And right now, there's a lot of fires happening. The inverse of all the weather, rain events are the fire events that we're seeing in the likes of Canada in North America at the moment. So this is a macro problem that we're seeing as the world warms up a little bit. In terms of bringing it home, there are things that we can do. We can stop building and planning to build in areas that are prone to flooding. And I think there's been a lot of really good work done on that, and it's been based on some really insightful data, and the data that highlights that we do have good flood maps and that do help us avoid planning in areas that are prone to flooding. And we've got to remember too, what happened, in the past is you'd have areas, mangrove swamps and wetlands that would help absorb a lot of those flood runoff and those creeks and the like when they enter the seawater. A lot of those wetlands have been taken back and been reclaimed, and we all love to live by the sea. This is a country surrounded by water, and we love to be near the water. But I think now we realise we've got to give a room back. We've got to rebuild some of those wetlands. We've got to stop building on areas that are risky and prone to flooding, and also the slips that are associated with coastal. So the data is highlighting that. I think we've shared as Tower a lot of our data modelling. We've shared with councils with an aim to help them plan better. I think there's been really good work done by the industry, the insurance industry as a whole, working with councils and government to improve the planning and to better understand, good areas for building and areas we should just sort of give back to nature.
Are you still, even now, seeing councils consenting developments on floodplains or areas that are at high risk to coastal erosion?
Never let as the saying goes, never let a good crisis go to waste. I do think the events in the past year have really been a reminder, a very, very timely reminder to all councils that we need to revisit where we're planning, and certainly the response that we have seen both as Tower, as an industry, everybody has caught that message, and I think working pretty darn hard now to really think about where to plan, and also to think about the building codes. Can we strengthen the engineering, the building consents to help mitigate some of the flood and water runoff?
Obviously, following the Auckland anniversary weekend flooding, Auckland Council is now promoting what it's calling the Making Space for Water program, which I'm sure you're reasonably familiar with. It's proposing 9 initiatives and an indicative cost of $1 billion over 6 years. What is your assessment of this plan, and what is the role of insurers in it?
Well, first of all, I think it's a good initiative from Auckland Council, and well done them for recognising the challenge and taking a positive step forward. I think a lot more information on the plan will come out in the coming weeks, and I haven't seen that information yet. We're all looking forward to it, and certainly once it becomes available, Tower and also the insurance industry will certainly be taking a really good close look at it and providing any feedback as applicable. I think it's all, it's along with a lot of the good work that's been done around the task force, the government task force in response to Cyclone Gabrielle. I think there's a lot of really good data that is now being shared, and we're starting to rethink how to respond to some of these flood events. One thing's very clear is Mother Nature always wins. So, we can't just sit there and try and pipe away this excess water. We have to think differently. And I think with the Auckland Council, I think it's quite innovative in how they are responding to that and thinking through their waterways. I think for those of us who live in Auckland, as I do, the Barry Curtis example out by Manukau is a really good example of where you provide wetlands, you build back wetlands, and you provide planning around an area to create a wonderful community aspect, but also enable you to cope with heavy levels of rainfall without flooding. And so I think if we can create pockets like that across Auckland, which I believe is the plan, I think that's a really positive thing. But it's thinking differently. It's not trying to contain Mother Nature in a pipe. It's actually, playing into the strengths of undulating land and creating natural ponding areas that can cope with excess water.
Yeah. Is the spate of recent extreme weather events changing the way reinsurers, who of course provide insurance for insurance companies like Tower, is it changing the way they look at New Zealand?
Yeah, reinsurance, which is, as you say, insurance for insurers, it is. And as mentioned previously, these problems of these weather events, large weather events, are not New Zealand exclusive. They're happening all over the place as water levels warm up and increase. Reinsurers are certainly more acutely aware of the challenges around those secondary risk perils. For New Zealand, reinsurers always saw the risk associated with earthquake, and Christchurch was a very timely reminder of those risks that are present here. They didn't necessarily see so much of the weather-related events, and so this has been a bit of a surprise to some of them, and certainly it's inevitable that insurance premiums, the cost of reinsurance, and thus insurance premiums will go up to reflect that.
Yeah, are you already seeing reinsurance costs rising?
The macro market for reinsurance has been increasing. It's what they call here is hardening or rising, and those premiums we've been able to absorb to some extent through gains in technology and gains in our platform. But ultimately, those costs, in our case with Tower, have been reflected in higher, more recent premiums.
Is there any danger that the costs become too high for the likes of Tower? And because obviously you know it's a game of risk transfer, so you transfer some of your risk to the reinsurers. I mean, are we anywhere near that happening yet?
I think in the case of Tower, we'll talk for Tower, is we're responding in two ways, both quite innovative. The first one is designing different products, and I'll come back to this, but it's like Parametric, an uncoupling of a traditional insurance product. And the second one is what we believe in as a principle is risk-based pricing. So those are the two ways we're responding to potentially higher reinsurance costs, although we just think they're better and fairer and transparent more generally. But tackle the first one, innovation. So a traditional insurance product combines general accident, earthquake, flood, etc., is quite comprehensive. What you can see through innovation is uncoupling of that comprehensive insurance and having insurance for specific events so that people can afford them. So, for example, parametric cover, which pays out on an event trigger. So it would pay out, for example, you could have cyclone parametric cover, which we recently designed and have been piloting in Fiji with the United Nations. It's quite exciting. And what it is obviously in the Pacific, you have a lot of cyclones. And the only way to afford that, we believe in the long term, is by uncoupling traditional insurance and offering cover like parametric cover. That's how, lower levels of communities can afford it. And should something like a cyclone event occur within a certain radius, say 50 kilometres from the person who took the cover out, it would immediately pay out within 24 hours. So it's really simple, it's clear, it's for defined cover, and that's a really innovative product that we believe has a lot of usefulness and benefits for communities across the Pacific, potentially in New Zealand. And the second one is risk-based pricing, which is basically saying, you pay for the risks that, are associated with that particular household. So you only pay for the risks that apply to you. And that way, we also think it's a fair way of pricing insurance. You know your house best, so if you're in a high risk area, you expect to pay a little bit more in your insurance. If you're a lower risk, you pay lower level of premium.
Just on the parametric insurance, so is that something that you're actively looking to introduce in New Zealand?
Well, first of all, we're piloting it as we speak now in Fiji. It's gone very, very well. We've had it there live for about a year, and we're going to expand it from Fiji to also cover Samoa and Tonga in the coming cyclone season, which kicks off roughly in about October, although clearly not always exact as we know. And we do think it has application for here in New Zealand in areas that could have higher propensity for flooding and cyclones, and where traditional insurance, comprehensive insurance, may become too expensive for some households and communities. We would like to explore the option for offering parametric cover.
Okay, so there's nothing imminent that you're planning on it yet, but it is definitely something that you're looking really seriously.
Yeah, something we're looking really seriously. We're talking to a couple of iwi groups, which is quite exciting, and they're giving us some feedback. And as mentioned, we've got it live in Fiji, expanding it to Tonga and Samoa. But it's something that we think would have good application here.
Is anyone else offering parametric insurance in New Zealand at the moment?
There's some small niche groups that do it for earthquake. One of those groups is called Bounce, who we have done a lot of good work with and shared insights with. But it's not something that's not common at the moment, because at the moment for a long time people have adopted and been able to afford comprehensive cover. As it becomes more expensive, and that affordability challenge may rise.
And you also mentioned risk-based pricing. Now, I mean, obviously that's something that Tower's been doing and others have been doing for a while, but you have expanded that to a couple of new areas. So landslide and coastal hazard risk. I'm just interested in this. Is risk-based pricing, is it something that the reinsurers specifically want you and maybe others in New Zealand to do? And is this again kind of a the risk sharing scenario where you share some of the risk with reinsurers and also with your customers?
Yeah. If I can just take two steps back and explain why we think this is a key principle. In all the research we've done, we talk to customers, and New Zealand has the highest level of home insurance of any OECD country. So we have roughly 9 out of 10 homes have private insurance, and actually more than 93% of all cars on the road have private insurance. We have a culture of appreciating that events happen, weather events happen, things happen, and I want insurance, which is really, really positive. However, when we look at the research, 2/3 of customers don't really understand the insurance. They know they need it, but they don't really understand it, and that's often because it's complicated, and they look at their premium and it's a dollar number, and they don't understand why they're paying X amount of dollars, $500, and someone down the road pays more or less. And so a big part of our approach at Tower is to help people really understand their cover and understand their premium and break it down. So what we do with risk-based pricing is we price according to the risks associated with your home. And so we break it down for earthquake, which we introduced in 2019. And then in 2021, we broke it down for flood. And looking forward later this year, we're actually going to then further expand that to cover coastal inundation or sea surge or storm surge, as well as slips. And that's pretty much your secondary perils. And say your home was on average about $1,000 of premium per annum. We'll break down that premium according to what's allocated for flood, for earthquake, and in the future slips and coastal inundation, as well as general accidents around home, EQC levy and the fire levy. And then when people see how it's broken down to their perils, and we help them understand why their home is rated low, medium, high, or very high for flood or earthquake, they then understand their premium, they understand their risks, and they then start to really value insurance. That's why we like risk-based pricing, because it's linked to the risks that are associated with your home, and then we help you understand the right cover, the right price for the right risk. And I think if you understand that, then you can get your cover right for your home, so you don't get surprises should something happen.
When we spoke last year, you talked about wanting to avoid uninsurable areas. I'm just wondering, are we any closer now to insurance retreat in New Zealand than we were, a year ago because of the recent spate of weather that we've had?
I think we are. So obviously there's a lot of information that's come out in the last few weeks in relation to Cyclone Gabrielle, and there'll be more information coming out from the Auckland Council, I expect, in the coming weeks, and again with regard to the cyclone. So we're looking forward to seeing that information. We know that it will cover off some homes that may be being considered for managed retreat, but we really need to see that information. And I think this has been a really record number of events for us, and I think it's really important that as a country, as insurers, as communities, that we do acknowledge them. Don't let that good, big disaster go to waste. It's time to adapt and get out of the way of where they're flood-prone areas, which I'm very optimistic that will be the case.
So this would be probably pockets of a city or a region rather than a whole city or region that you're...
We'll wait and see what we get in the next few weeks, and it's really it comes down to the councils. We've shared as an industry and certainly as Tower, we've shared a lot of our data with the councils. We want the councils to have the best available data they can have in order to really plan forward to help adapt and mitigate flood and the like.
In terms of that risk-based pricing, are there any further areas where you may introduce that to in the future? So there's 4, you've got 2 now and 2 new ones coming in. Are there any others that are possibilities?
I think maybe looking at flipping it over a little bit, there are other areas like motor might surprise you. We did Go Karma about 2 years ago with an idea of helping customers understand. We all think we're great drivers. We're the best drivers in the world. But actually, we did Go Karma to really say, are you really the best driver in the world? And that was through your phone, a phone-based app, to help you understand, are you speeding? Are you going too fast around roundabouts? See who's talking on their phone. And so it was a real eye-opener for a lot of customers. Actually, maybe I could improve on my driving skills. An expansion of that is telematics, which is really taking the data from your car as well as like a driving app and putting those together and then starting to price according to actually how you really are driving. And so if you do you're heavy on the foot and you're speeding, your propensity or likelihood of a crash is higher, and we would reflect your premiums. But if you are a conservative driver and you do stay within all the guidelines and the speed limits, et cetera, and take your time, well, then your premium should reflect that. So telematics is another way of risk-based pricing for motor vehicles, and we're exploring some options there, and we'd like to look at that further, downstream. But right now, the most important thing is home insurance and getting that right.
I mentioned your interim financial results came out recently. I was interested to have a bit of a chat about that as well. Obviously you had a half-year loss and no interim dividend, but you retained your full-year underlying net profit after tax guidance, albeit you had downgraded that in February after Cyclone Gabrielle and the Auckland anniversary weekend floods. So, how is the business holding up financially?
Look, I think these events have just highlighted 2 things. One, insurance has never been so paramount, so important, and I think valued in terms of customers, community, businesses. And I think as a country, we are very conscious of the weather. We do have a good culture around taking up private insurance. We love our homes, and it is important. We recognise the importance of actually having them protected. So from in the market point of view, people have been reminded of the value of insurance, and that's good for Tower. From Tower's point of view, I think as we're sitting here today and we're facing into our biggest ever storm event, our biggest ever cyclone, and in our case, we are also in a number of countries in the Pacific, and Vanuatu had 2 very big cyclone events, which we are supporting and helping them recover from that. It just demonstrates how resilient Tower is that we are supporting all of these customers with a significantly higher level of claims, and we're still giving guidance that we're going to be profitable this year. Much more modest, I appreciate, than as we started the year, but as an insurer facing into these big events, I think a lot of people would recognise that, and investors have been very supportive of what we're doing, and the feedback in the recent half-year results was supportive and recognised the magnitude of these events that we're currently managing our way through.
Obviously, the weather's been the main focus of our conversation, and that goes without saying given what we've experienced in recent months in this part of, certainly in the north of New Zealand. Obviously, the underlying sort of economic situation is very inflationary at the moment as well. So that's been very challenging for people and businesses. I did see a Forsyth Barr report a little while ago where they talked about Tower being able to continually pass through costs, and they talked about 140, as they put it, price changes this year. Is that price increases, and is that, I mean, what's driving those, and where are your margins in all of this?
Yeah, look, a key part of how Tower is set up is a digital direct player, particularly focused on personal lines and SME. And at the heart of our success has been through our leading customer experience. And within that, it's been our ability to really adapt and create a really nice, simple, transparent customer experience. We've invested heavily in technology and data, and that has enabled us to respond quite quickly. So you rightly highlighted, we haven't just had weather events, we've actually just had a record inflationary period. And at the moment, we're also experiencing, unfortunately, a lot of theft around motor in particular. And I guess how we respond to that and adapt is at the heart of Tower's resilience. And when we look at that, our ability to price and reflect price to match the risk. And in essence, when you look at an insurance company, the key thing is managing the margin, correctly and accurately assessing the risk, and then getting the right price for that, and then making it really transparent for customers. And so when we talk about 140 pricing changes, we have done 140 targeted changes across both motor and home and contents in the past year, as we've responded to seeing what things are happening in the market. So when we saw inflation coming through roughly about 2 years ago, actually, it started to come through April 2021, we started to do targeted changes because we could see the cost of rebuilding homes after accidents have happened was rising. And we reflected that immediately in terms of prices. Similarly, in the last 6 to 12 months in particular, with certain lines of motor vehicles have higher risks of being stolen. And a number of them, particular models who don't have immobilizers, have been used in a lot of ram raids and have been stolen, basically. So we have reflected the premium against those lines. Because at the end of the day, I do think people understand that insurance is about, I'm covering, protecting something. I want a fair, transparent price. For us, we want to get that match. And our ability to do that is through our technology and data and our ability to quickly adapt with pricing.
So that's 140, the price changes. That's all increases?
No, not all increases. We want to be competitive. We're in the business of being a business. We definitely want to be competitive in the areas where we see maybe potentially lower risk. We want to be sharper on those ones, and where we see higher risk, we want to have the right match. So it's both a combination, but fair to say, over the last 2 years, we have seen record inflation coming through. We have seen, unfortunately, motor car theft, and of course, we've had higher reinsurance costs more recently on the tail of these very large events.
And your management expense ratio, is that kind of your key margin that so that improved a little in the interim results you just reported?
Yeah, we've been really, really pleased. Management expense ratio is basically the cost of management to bring on policies, to service them and support them, as well as pay out claims on an annual cycle. And I've been in the role now about 2.5 years. When I first arrived, we had a management expense ratio of around about 43, 44%. Today, as we sit here, it's 35%. So we've seen a really good lift. And that's reflected in the efficiencies that we've got through technology, good use of data, but also we've got a unique footprint. We operate in 8 countries, 7 Pacific countries, as well as Aotearoa. And in the case of Suva now, we have around 200 staff, full-time employees of Tower in Suva, which is fantastic. That allowed us, for example, in the Auckland anniversary event, within 24 hours of that flooding occurring, we could take calls to help people lodge their claims and take emails to help people lodge their claims in Suva, as well as the team working remotely, Auckland and Rotorua. And so to have that ability to move workloads, because we all operate off a common leading technology platform, is a great advantage for a business, and that helps us drive those efficiencies through and ultimately the MER, the management expense ratio.
So just to sum up, I had two more questions that I thought I would throw at you to bring it all together. So I guess to go back to the start with all these extreme weather events we've had in recent times, to what extent do you think the frequency of these events and the damage that they have been having is changing insurance in New Zealand?
Again, I think it comes right back to that principle of we know we need insurance. We love our homes, we love our cars, our e-bike, our jet ski, the family pet. These are the things we all like. They're part of our Kiwiana lifestyle, Pacifica lifestyle. And so when you've worked hard to get those, you want the insurance. 2/3 of all of our customers say they don't understand it. We've got to do a better job as an industry, and we certainly at Tower, we're committed to making insurance much fairer, more transparent, easier to understand, easier to adapt so that you can just pop online on your phone and change something. If you need to add on, a son or a daughter who's coming home from university for the holidays, or if you want to go on a fun holiday to Australia or Fiji, you can quickly do travel insurance. You want your insurance to be easy and to be flexible. So we know we need insurance, but it needs to be flexible and transparent. I think as we look forward, what these events have taught us is we also really need to be innovative. We need to use technology. We need to use data to make sure that we do get risk assessment right, and then we get the right premium. And then customers can understand and see that and understand why their premium is what it is, and then be proactive to help them try and mitigate some of those risks. So help people understand these accidents happen at, in winter time. Be careful with your bar heaters. Be careful loading up too many devices to the same PowerPoint sockets, because these do create accidents. And so really sharing those insights with customers so they can avoid some risks, as well as the risks they have are fairly priced and they have the right cover in place. Ultimately, I hope, in some ways, what we're really looking to do here and what these events have created is an awareness of things changing, our ability to adapt and mitigate that, both as individuals and communities, but also as a country where we're surrounded by lots of water. We get a lot of storms. We also have beautiful homes, and how to look after that for today and for future generations.
You also mentioned earlier on, it might have even been before we started recording, obviously Tower is the only share market listed insurer in New Zealand. And I'm just interested too in this changing world. I mean, I was reading earlier today about a couple of the big US insurers that have pulled out of California. I think the fires there are obviously a big factor in that. But that we've already discussed here, this idea of some uninsurable areas in New Zealand. So I guess the final question is, in this changing world, are you confident there's going to remain a role for a private sector sort of share market listed insurer like Tower?
Absolutely. I think the one thing these events again have highlighted is the need for insurance. But I do think it needs to be smarter in terms of using technology, using data, uncoupling insurance. So being innovative around it, like the Parametric, being smart about risk-based pricing. I think the traditional model of insurance, where you had lots of commissions and it was sort of sold and forgotten, those days maybe have passed us by. I don't see that as a future, or certainly Tower, we don't see that as our future. We see certainly one that changes with people's lifestyle, easy and simple, and you can look at it and it's all in one place, and you don't have to try and chase down that shoebox of statements. So it should fit who you are, your situation, and develop with you and adapt with you. So I think, there has to be, but at the same time, to make it affordable, as a community and as regions and as a country, where we are often seen as the bit of the canary in the cave here. We're the first to see some of these events. We do need to be smart, and we do need to adapt, and we do need to recognise that we need to do some things better about climate change.
Oh, thanks a lot for that, Blair. That's Blair Turnbull, who is the CEO of Tower Insurance. Thanks for joining us again. Appreciate your time. And I'm Gareth Vaughan from interest.co.nz with another episode of our Of Interest podcast.